Hey guys, in this video, I'm going to be talking about some powerful secrets to following trends. I know most of our subscribers are day traders and you would like to get some insights when it comes to trend following strategies. So that's what this video is going to be all about. Okay, I'm going to be showing you a few strategies and a few secrets to following trends accurately, okay, to get the best possible trade results. Now, if you love the content, please, I want you to subscribe, leave a like, and share your opinion in the comment section, okay? So without further ado, let's get started with the video. Now, the first thing to understand when it comes to following trend is that there is no right way to follow trends, okay? You know, some traders will tell you the best way to follow trends is looking for an entry or trying to enter the trend at an early stage and riding the trend or holding your trade till we get to the end of the trend. But the thing is, no one actually knows when a trend is going to end for sure, okay? The markets can be so weird sometimes. So what I want you to understand is that you do not necessarily have to enter a trend at an early price or at, an early stage and hold those trades till you possibly get to the end of a trend. You can get into trends at the middle of a trend, okay? You can get into trades at the middle of a trend, or you could get into trade and exit your trades while you look for opportunities to open more trades while following those trends. So I'm going to explain everything I just said in a few minutes, okay? So the first thing to do when it comes to following trend is spotting out a clearly defined trend using market structure, okay? So this is where most traders make mistakes. So they feel whichever market or whatever market gives you a bearish move or a bullish move, it automatically means you've gotten a good trend. But there are different types of bullish trends and bearish trends, and they're what we call clearly defined bullish trends and clearly defined bearish trends, and this can be determined when we look at the market structure. So for this example, for this video, we'll be making use of the natural gas as our first example. So this natural gas on a 1 hour time frame. I'm not going to go too high. So okay, let me just quickly start from the 4 hours time frame. So from the 4 hours time frame, we can see a very good price decline all the way from these highs here down to these lows. But to get more detailed information about this chart, we go down to the lower time frame to see how we can spot out great trade opportunities. Now, the secrets I'm going to be sharing in this video is specifically for day trading, okay? For day traders. You can also use these secrets even if you're a swing trader or you're a long-term trader, right? So even if you want to hold trades for weeks, you can decide to do that. If you want to scalp, you can decide to do that. And if you want to, trade swings or day trade for 200 pips, 300 pips, you can also do that. So moving down to the lower time frame. So let's start from the 1 hour time frame. You can see that this is a clearly defined trend, okay, when looking at the market structure on natural gas. The reason why I say this is because we can see that the price is forming clearly defined highs and lows, right? So for a bearish market structure, we are paying attention to the highs and the lows, which means price has to be forming a series of lower highs and lower lows for us to determine a bearish market structure, which we have on natural gas. So how do we follow this kind of trends? And let's say, for example, we have price at this level here, at these highs. How do you know a trend is going to start? So this is where most traders struggle with, trading trends. They do not know when a trend is going to start, right? And the thing is, you do not need to know when a trend is going to start, okay? So the reason why I say this is because when you get a clearly defined, trade opportunities, you get into those trades and you just follow the trade as the trade evolves or as the market evolves, right? So let's say, for example, I'm going to start from this price level here, okay? So let's assume you missed this sell trade here, okay? Because this opened as a gap. So let's say you missed the opportunity to go short at this price level and you watch the price closely, declined all the way to this level. So what we can see here is that we can see that price made a bearish continuation pattern. Okay, so this is one of the best ways to follow trends. You can use chart patterns to follow trends. So you do not need to jump into a trade at this high, hold the trade, and hope that this is going to be a long-term bearish trend, okay, in order for you to make significant profits. So now there's no way for you to know at this price level that this is going to be a long-term trend that will last for months, right? So what you do is when you get a trade opportunity, let's say, for example, you jump into a sell trade here at the break of this support level, and you made good profit, fine, you take a profit, right? So looking at the next market structure, okay, or looking at the next chart pattern, excuse me. So looking at this next chart pattern, what you can see is that the market made a bearish continuation chart pattern, which is a sign of a potential incoming bearish move, right? So what you do is you simply get into a sell trade. Now, what most traders do is they want to, start adding all sorts of indicators like moving average in order to get a perfect entry or to get a perfect trend. There's no such thing as a perfect trend because you really don't know before the trend is made, right? So there's no way to know at this price level that this is going to be a perfect trend. So what you do is you chop the market as the trade opportunities comes your way. That's what I'm going to be showing you in this video, right? So now the first trade opportunity gives us a bearish continuation chart pattern, which is some sort of a bearish flag, right? So this bearish flag had a breakout, okay? So we had a breakout here. You jump into the sell trade because this is clearly a sell trade opportunity, right? Because we had a very big bearish decline. We had a price consolidation giving us a bearish flag, which is a sign of a bearish continuation pattern. Then we jump to a sell trade. Now your stop loss could range from high to high because it depends on your risk management, right? So a much recommended stop loss would be at these highs, because at the time if we get a price reversal back above this high, it means there's likely going to be a price reversal. Okay, so this trend might become invalidated. So you take a sell trade and you get out of the trade when you make some significant profit. So you could use previous lows, okay, to determine your exits, right? So I'm not going to be focusing on exits right now. I'm just going to show you how to follow trends, right? So now you get out of the trade. So this is one quick trade for you. So what you do, you stay patient and wait for the next trade opportunity, right? So over here, if you take these lows, you can see this is clearly a support level, right? So now you're having another support level, okay, with a good consolidation at this support level. So I'm going to talk a little about breakouts in a bit, okay? So we have a good support level and we had a bearish breakout. So you jump to a sell trade because this is a sign of a continuation of this bearish move. So at this price level, you jump to a sell trade, and this is natural gas. If you measure this move, you might think this is a small move, but this is actually a 300 pips move or a 250 pips move, which is a significant for profit for a day trader, okay? Especially if you're having a considerable account size, okay, a good account size or a higher balance, right? So now you jump out of the trade because you've made some profit. So at this price level, this already would have told you or would have signified that this is potentially going to be a long-term bearish trend. But like I always tell my students, we don't trade based on assumptions, right? We trade according to what the chart gives. So I'm going to block out this area of my chart right now in order for you to understand what I'm talking about. So assuming, okay, we block out this area of my chart, you can see at this price level, you've had two trades, right? So you had your first trade here, you got out of the trade, and you waited for the next trade opportunity. Then we had a support level, and you took a sell trade, got out of the trade, and now we've had two trade opportunities from these two bearish chart patterns, right? Now, even if you don't want to take this as just a support level, you could take these highs, okay, lower highs, which means this is some sort of descending triangle with a bearish breakout. So this is also a bearish continuation chart pattern, okay, signifying bearish moves. Now, from what we can see on my chart here, you can see that we have made lower highs and lower lows. So we have a high here, another significant lower high, another lower high. If you take a look at the lows, we have a low here, another low, another low. And the reversal we had from this low brought price back to this area of value. So this is something you need to understand about market structure. So within every market structure, we have what we call area of values. So area of values are simply support levels turned to resistance levels. That's for a bearish trend, while for a bullish trend, areas of values are resistance levels turned to support levels. So as you can see at this price level, this is a support level. We have one bounce, two bounce, and a price consolidation around this level, right? Then we had a price reversal of these lows, retesting this area of value. Okay, so this is a significant area of value within a bearish trend. So your area of values are where you are likely to take trades. Okay, you are likely to take the best trade opportunities. Why? Because for a bearish trend, at an area of value, you are likely to see sell pressure coming from the bears. Okay, so for in a bearish trend, this area of value can also be regarded as a supply zone. Okay, supply zone, because there is a potential, a possibility that there's going to be more sellers at this price level. So in our next videos, okay, maybe next week or within this week, I'm going to give more lectures on trading supply and demand and understanding market structure. So I'm trying to keep this video strictly on following, trends. Okay, so this is just a quick note. At this price level, you already know this is a bearish trend. So I'm going to clear off this. I'm going to bring back the chart so we can continue, right? So if you follow the market like this, you can see that after we had this bearish breakout, all you have to do is stay patient and wait for the next trade opportunity, right? So when do we get the next trade opportunity? You can see that we had another one here, okay, in form of a falling wedge. Okay, so I'm going to show you this right now. So this is some sort of a falling wedge with a bearish breakout. So you can see clearly we can actually follow trends using chart patterns. So depending on the trend, if you're having a bearish trend, all you have to do is look for bearish chart patterns or look for bearish breakouts, because this strategy combines, bearish chart patterns and breakouts for you to take advantage of a bearish trend, right? And we can only do this if it's a clearly defined trend. Okay, I'm going to show you an example of a trend that's not clearly defined, which would make it somewhat difficult to take this kind of trade opportunities. So you can see taking a sell trade here, now we had a good ride to the downside. So all you have to do is take your profit and wait for the next trade opportunity. Okay, so we have some sort of consolidation here, and you could as well take these lows. And trade the breakout of these lows. You can see this is kind of like a head and shoulder pattern, but it's not a very valid head and shoulder. This is the head, the right shoulder, and the left shoulder, right? But this is not as clean as you want an head and shoulder pattern to be. But the point here is that we had a small consolidation and we had a bearish breakout, which is another opportunity to go for a sell trade. And you can see the bearish move. So from this price level down to this price level, you've been able to take about 4 trades, right? So moving on, following the same, market structure, the same chart pattern, the same principle, you can see we had a consolidation and we had another breakout, another opportunity for a good sell trade opportunity, right? You take a sell trade, you stay patient, and you wait for the next trade opportunity. Now, at this price level, we seem to, range a bit, right? So even if you did this, you are still going to be in the win. But the most significant trade opportunity here is, watching out for what price did, making a support level at this price range. Okay, so when we got to this level after our trade here, we had price bouncing off this support level, and I'm going to show you why. So the reason why we had this significant support level is because on the higher time frame, so on the daily time frame, for example, we have a significant support at this price level. Okay, so this is our support range at that price level, which is the reason why we had those consolidation. Okay, so I'm going to put this out. Okay, so you can see on the daily time frame we had a consolidation here, and we had multiple price reversal at this level. So that's what led to the support level we had here. Okay, kind of like price retesting an area of value. So I'm going to go back to the 1 hour time frame, so this is clearly visible. So moving back to the 1 hour time frame, so you can see this was an area of value, okay, which comes from what we had on the daily time frame. So with this area of value, I'm going to get rid of this one. So you can see area of value, multiple bounce off this level. This is because this is a valid support level dating back to months ago, as we just checked on the daily time frame. So we eventually broke through, and this will be our next opportunity to go short. Now, for traders waiting for confirmations, you can see most of the trades we have, some of them have, a retest as confirmation, while some of them just went all the way down. Like this breakout here had no confirmation. This breakout here had no confirmation. This breakout here, okay. So if you take the trend line like this breakout here had some sort of confirmation as a retest, right? Which is what we had here. So we had a breakout, we had price retesting that level, and then we went down. So this support level here, you didn't actually need a confirmation for this. I'll tell you the reason why. So you didn't need a confirmation for this because we had a consolidation just above the support level before the breakout. So there's no need to wait for another confirmation before going short, right? So now at this price level, we had a breakout, a retest, and we had price go down. Now we had another consolidation, a retest of this support level. So this is just a no-brainer. So this is how you trade. Even if you don't want to hold trades for long, you can follow trends, getting in and out of trades, right? So this is another retest of this area of value, and we went down. Good breakout here. Okay, on the 1 hour time frame, it doesn't look like a good breakout, but if you go down to the 2 hours time frame, let's see. Okay, you can see a more significant candle formation. So if you try the 4 hours time frame, so on the higher time frame, you get better, confirmations in terms of the volume that goes along with those breakouts. So this is a breakout on the 4 hours time frame. So on the 1 hour time frame, it's much more clearly defined. So even if you don't feel enough confidence to get into a breakout trade, then you can simply stay away from the trade. So if you are trading this kind of breakouts, your stop loss would have to be at the highs, okay? Like around these highs. Your stop loss will need to be around these highs. Your stop loss will need to be around these highs. Your stop loss will need to be around these highs. So I'm going to explain the reason why now. Okay, so my point to all these I just talked about is that you do not need to look for a specific entry, or you do not need to jump into a trend early and hold your trade all the way to the bottom of the trend for you to make significant profits when it comes to following trend. So even if you jumped into a trade, or even if you spotted this trend at this price level, okay, so let's say you spotted this trend at this price level, you would still have been able to make significant profit following this trend all the way down to these lows, right? So some traders, when they see a trend like this, they are scared to jump into a trade because they feel they should have entered at this price level, which is totally not true. Because even if you enter at this price level, there's no way to know for sure that the trend is going to last in test of time, right? So what you do, okay, in my opinion, how I follow trend is that I just trade what the market gives me, right? So when I get a bearish continuation pattern like this, I see a good breakout, I jump in, I take my profit, I wait for the next opportunity, I jump in, and eventually you get to see that this is turning to be a long-term trend, and you can just keep taking quick trades as the market evolves or as the trend evolves, right? So now I'm going to show you something real quick why this is even much more profitable than, holding a trade from these highs and hoping we get to these lows, okay? So this strategy of, taking quick trades within a trend and taking profit is less risky and much more profitable. I'm going to explain why. So now let's see for example, you take a 0.1 lot trade, or let's say you take a 1 lot trade from these price levels here, right? To these lows, this would be approximately 2,000 pips, right? So this would be approximately 2,000 pips from that high to this level. That's if you were lucky enough to hold a trade from these highs, hoping to, aim for this level, which is almost impossible because there's no way to know for sure if price is going to get to these lows. So my guess is you would have probably taken profits at these lows, right? Because this was a significant area of support, which gives us around 1,700 pips, right? So now let's take a look at the opportunity you get when you scalp or when you take quick trades. Now, your first trade is going to be from here down to this level, right? So this is approximately 400 pips. Good. So that's 400 pips. Then your next trade is going to be from this breakout down to this level. So this is around 300 pips, so which is already 700 pips. Then your next trade is going to be from this price level down to this level, which is already 400 pips, another 400 pips. So this 1,300 pips. Then your next trade is going to be from this level down to this level. So this is already about 1,600 pips. And now you have another trade from here down to here. So this is already approximately almost 2,000 pips already, right? So you have another trade from here down to this level. This is almost 2,300 pips. And you have another trade from here down to this level. This is almost 3,000 pips or 3,500 pips. So the reason why this, quick trade strategy is much more profitable is because whenever price goes down, it reverses, right? Consolidates to give you a much better entry at a higher price, okay? At a better price, excuse me. That's the reason why whenever you take quick trades and let the market consolidate, you get better trade entries to accumulate those profits over time. So eventually, let's say you were able to take 4 trades and this market tends to reverse. You know you have gotten 4 trades, okay, and you're probably going to miss just 1 trade. But trying to hold a trade from these highs and trying to target these lows is just unrealistic because you have no idea when the trend is going to end. So that brings me to my next point. When it comes to following trends, guys, there's no way to tell for sure when the trend is going to end. So assuming this trend is going to end at this price level, all you have to do is you jump into a trade, adjust to a considerable risk level, so which your stop loss is going to be around this level. And if you miss the trade, you just know, okay, you had 7 good trades and 1 bad trade, which was the point, the idea of not knowing when the trend was going to end. So instead of trying to target the bottom or aim for the bottom or trying to figure out where the trend is going to end, you can simply just keep taking the trade opportunities that you get until it stop working, right? So this high trade, you do not need to be scared of losing money, because losing is part of the game. But what matters is trying to make more wins than losses. And if you're having a very good risk to reward ratio, very good risk management, you can see that from this price level to this level, you would have taken up to about 7 good trades, and eventually you're going to miss one because that last trade you take would eventually be the end of the trend. So it doesn't hurt to follow this type of strategy. You don't have to jump into trades at an early price and hold those trades for you to know that you are riding trends. So you can ride trends simply by following chart patterns and breakouts as the trade evolves. Okay, so something to also help you understand when it comes to following trend, I'm going to remove these tools right now, is that most persons tend to use trend lines to follow trends, and this is just inaccurate in my opinion, right? So assuming you took a trend line like this, I'm going to make a quick example right now to explain why this is really not a valid way to follow trends. So some persons or some traders, they use trend lines to follow trends. So whenever price gets to the trend line, they tend to open a sell trade. Whenever price breaks the trend line, it means the trend is coming to an end. Okay, but as you can see at this price level, this turned out to be a fake out, which led to the continuation of the trend. So the best way to follow trend is not using trend lines. Okay, it's by understanding how market structure works, right? Until there's a break of market structure, a trend is likely not going to end. So in this case, there's clearly no break in market structure because we've continued to make series of lower highs and lower lows. And remember, this is natural gas. So this is just a very good trend you can follow. Just keep following the trend, keep following those trade opportunities till we eventually get to the end of the trend. So what I mean by breaking market structure is where we eventually start making higher highs and higher lows. So something like this. So if price start making something like this, so let's say price goes up to this level, comes to this level, goes up to this level, then this would signify a potential change in trend, because these highs will eventually become higher than these highs, and these lows will be higher than these lows. So until we get something like this, then it's logical to expect that the bearish trend is going to continue, and we look for only sell trade opportunities. So as you can see, even if you took these highs here, okay, this is not a very good example. So let's say, for example, you took this high and this high, right? So fine, this trend line would give you a very good range where you are going to take trades. But at the time price comes to this level like this, right, this doesn't mean the trend has ended just because we have a candle close above this trend line, because eventually this price here is still low. It's making a high lower than this high, right? So we could eventually see a drop, which would give us a fake out, because this is clearly a bearish trend. So I'm going to talk more about market structure and how to understand and follow market structure in our next video, but this is briefly what I really want to talk about in this video, and I'm going to show you one more example real quick. But before I do that, I just want to remind you that we have a full course on how to trade forex on Udemy. So we just launched our course recently. If you're interested in learning how to trade forex, check out that course on Udemy. Okay, we have a link in the description below, so just click the link, check the course out. We have tons and tons of topics covered. Okay, even what I'm talking about right now, I covered it in details in that course. So try to check it out, subscribe, enroll and leave comments, okay, leave reviews and ask questions. So moving on, one last example real quick. You can see this is a chart on Euro USD, okay. What you can see right now, this is a 4 hours chart. From this price movement here, this is clearly an uptrend. But the problem with this uptrend is that we are not having clearly defined highs and lows for us to get those suitable trade opportunities like we did on natural gas, right? So the good highs and lows ended at this price level, but all the way from here to the current price level right now, there's no, well defined, clearly defined, highs and lows. So that's the reason why I cannot apply the strategy we used on natural gas to this bullish move on Euro USD, because you're going to end up losing a lot of money. As you can see we had a higher low, right? This low higher than this low. We had another higher low. We had another one here, but you can see this low made a lower low, and this one made a lower low and a lower high. But the next thing you can see is we're having price moving back above this high. So this is just totally not, the best type of trend you want to follow, right? With the strategy I just explained. But if you take a look at the prior trend, so the bearish trend before the trend reversal, you can see this is a clearly defined bearish trend, because you can clearly see price making lower highs and lower lows. So what you have to do is, you don't have to wait or expect, you are not expected to jump into a trade at these highs and hold your trade for almost a year to this low for you to take profit. You can trade and chop the market as the trade evolves, right? So this is one trade opportunity here. So you can see this is some sort of bearish flag, okay? So which is a bearish continuation chart pattern, right? So this one. So we have another one here, right? 2. So these are just trade opportunities you could take advantage of as the price evolves, okay, as the market evolves or as the trend evolves. So this year is also a significant profit. So if you enter at this breakout down to this level, this is around 100 plus pips. So the thing is, natural gas is a much more heavy commodity compared to the currency pair USD. So that's why this movement here seems to be smaller than what we have on natural gas. So on natural gas, this move here would have been maybe approximately 300 pips or so. But you understand what I'm talking about. Now you can see this price level here. This is a support level, right? So we had a consolidation, we had a support level, and we had a good volume breakout, which will be opportunity to go for a short position. Now, even if you fail to take this trade, right? This is another trade opportunity here. Okay, this is another trade opportunity here. So just following chart patterns and breakouts is enough to help you take advantage of trends. It's just enough. So this is an ascending triangle, but with a bearish breakout in a bearish trend. So this is just a no-brainer, a sell trade opportunity. Then we have another one here, right? So remember, we also pay attention to area of value. So over here, this was our support level, which turned into a resistance level, right? So this is our support level, turned to a resistance level here. And if you were to look for a chart pattern from this would have been a rising wedge. So this would have been a rising wedge with a bearish breakout. So you can also call this a bearish flag, right? Because the lines are almost parallel. So some brokers will give you different price range, so which would not make this support trend line parallel to this resistance trend line, but you get the point. So this is kind of like a bearish continuation chart pattern, okay, an ABC pattern, ABC, right? So you just trade and follow up the trends by trading chart patterns and breakouts, and follow the trend as the trend evolves. So this is how I follow trends. So what I want to understand is that you do not need to cash a trend early for you to take advantage of those trade opportunities that comes from following trends, right? So this is another one here. Breakout, price down. So eventually this trend ended at this price level, right? When we started making higher highs and higher lows. So this is what I'm talking about when I said in order for you to determine when a trend is broken, we have to price needs to make higher highs and higher lows. That's when price is breaking from a bearish trend. So as you can see, we did exactly that here. Higher lows, right? Higher highs. So this high was higher than this high, and this high, and this high. So this signified a potential trend reversal. And all the way from this price level, you can see we slowly moved to the upside. So we had this bullish run. But this bullish move here is not as detailed and clean as we had here on this bearish move. So that's the reason why you can't apply the same strategy here to what you had here. So just a quick summary and a recap from what I just talked about. So in order for you to follow trends accurately, more precisely, you need to first determine a clean trend, and you can do this on different time frames. So you can even go as low as 5 minutes time frame, 30 minutes time frame, or even 2 minutes time frame if you want to scalp, as far as you're having a clearly defined trend, okay, making clearly defined highs and lows, then you can apply this strategy. And lastly, you do not need to catch a trend early in order for you to just open a trade and ride the trade till we get to the end of the trend, because there's no way to know when that trend is going to end. So what you do is you simply follow the chart and follow the trade as the trade evolves, and you can use breakouts and chart patterns to follow those trends. So in the next video, I'm going to be talking about market structure and how to trade support and resistance breakouts within market structures in the next video, and that video is going to probably come up maybe next week or something. So if you love the content, guys, subscribe, like, and watch out for the next video.